For Edexcel GCSE, there are 15 formulas that you just need to know like this. You're not given a formula sheet, so you just need to learn them. These are the 15 formulas that you must learn. Number one is total costs equals total fixed costs plus total variable costs. If the question comes in pounds, make sure you put the pound sign in. Number two is revenue equals price times by quantity. The price of something times by the amount that you sell. So revenue equals price times quantity measured with the pound sign if it's in pounds. Number three that relates to number one and number two is profit equals revenue minus total costs. Remember, total costs equals total fixed costs plus total variable costs. Number four, break-even output measured in units, not in pounds. Break-even output measured in units equals total fixed costs divided by sales price minus the variable cost per unit. Also, you might want to work out the break-even point, which is this time measured in pounds, if that's the currency you're working in. And that's break-even output measured by number four times by the sales price. Number six is the margin of safety related to break-even analysis. The margin of safety will be measured in units, and it's going to be your actual output minus your break-even output, but it might come as your budgeted sales minus your break-even output. So just watch for the budgeted or actual, but that's the thing you're going to use first in the margin of safety formula. More details on break-even analysis, click up there. Net cash flow, number seven, is going to be your cash inflows minus your cash outflows, and that's going to be on the cash flow forecast, being one of those financial statements that you must learn. Carrying on from cash flow statements, number eight is your opening balance, and your opening balance is going to be the closing balance of the previous period. Clearly that will be measured in pounds if you're working in pounds. And remember, the closing balance is going to be the opening balance of the current period that you're working in, and then plus the net cash flow. Remember that net cash flow can be a plus or a minus number, and if it's in pounds, then it's going to have pounds as the units. Number nine is the interest on a loan as a percentage, and that's going to be the total repayment minus the borrowed amount, all divided by the borrowed amount times by 100 because it's measured as a percentage. Number 10 is gross profit when it's in units, and it's just going to be revenue minus COGS. COGS is cost of goods sold. You might see it as manufacturing cost. Number 11 is gross profit margin, which is related to number 10, and that is going to be measured a percentage, and that is gross profit that you calculated in 10 divided by revenue times by 100, therefore it's in a percentage. Number 12 is net profit. Net profit measured in pounds will be gross profit that you calculated in number 10, and it will be minus operating expenses and minus any interest or tax there is. And then number 13, which is your net profit margin that relates to net profit margin, so it's in a percentage, and that's going to be net profit divided by revenue times by 100. And number 14, ARR, the average rate of return. That's going to be the total profit divided by the number of years that the project lasts for, and work that out first, then divide all of that by the cost of the investment. The cost of the investment might be the cost of the capital, or it could be the cost of the machinery. Then once you've done that, times it by 100 because it's measured as a percentage. ARR will be a percentage. And number 15 is percentage changes. Percentage changes, clearly measured in percentages, and remember, new number minus old number divided by old number times by 100, and that gets you the percentage change. Hope that helps. If you're liking these videos, please subscribe. Make sure you click right there, and see you there at the next video.